Okay, so there's two easy ways to detect if a trap's been in place or not. We can look at the SSI and also we can look at the percentage long or short. And they're both the same things, but they're expressed differently. This is a numerical value telling us how to hold the position. So you can see how long they are in the pound USD. For every one person short, there's 2.92 people trying to buy. And because if they're looking to long, what price should fall? Let's look at the Euro USD. So every one person who are short, there's 2.37 people to that one person ratio, that's long. So it should be falling because they're long. So the trap's in place when we cross the zero. That's it. Very, very simple. Once it crosses the zero, then we know the trap's in. Here's the US 30. That's a trap here. And 31.05, 31.15 ish, and so they've gone long, so price falls to punish them, and then the trap's in. So trap activated, trap sprung, and profit secured, because they'll be taking the opposite side of the retail guys if they were smart. Okay, and they wouldn't really want to be doing the same as the retail guys because they're counter trend and emotional, and they lose lots of money, and they're not really taking into account all these macro fundamental stuff as well. The fact that we're actually, recession looming, yield curve inversion, Russia, Ukraine, COVID, you name it, they're still long. So we need to come down and auto flush them. And I bet you my bottom dollar, right, timestamp, when this crosses 50% and the rest of the indices cross into green, that will be the bottom, and then we're going to rally into the year end. Okay. At the moment, there's no point, there's no reason, rationale for this to come up because the retail guys are long, and it has to come down to take their stops and to punish them. And once they've rinsed out the stops, then we'll rally. So here's gold. We can show you gold. I can't unfortunately show you the order book because my MetaTrader 4, it's saying no connection. And I think I know what I did that caused it. I was trying to load an indicator on cryptocurrency, and obviously it wasn't going to work, and it's bugged out really badly. So I might have to reinstall MetaTrader 4. But that being said, we'll ignore the order book, and I can just show you the SSI. And so let's have a look at gold, and we can see a direct consequence of them going long on price action. Let's have a look. Right, maybe do that as well. Right, so really you could argue they sort of started going long here, right, and so they went long. You can just follow price. Let's maybe move that a bit. There we go. So it's really fallen. So they hold long, and let's have a look at the 1800 figure. Did we fall or what? Yeah, we did. Why? Because it was a sell at the high level. Dynamically, over time, look left, over time, they're adding. So the trap's not only in, but they're making it worse for themselves. So really, to make a long video short, is that you just look at the SSI level, and once it crosses into buy or sell, the trap's in. And you can also, alternatively, if you wanted to, you could check on an intraday basis the failure rate. If it's above 50%, the trap's in. We're below 50%, the trap is being placed. After, then it's been triggered. Retail guys have shown us their hand in a game of poker, and they're saying we want to buy the euro. And so the smart trader is going to go, oh, you're going to buy the euro. Okay, we know what you're going to do. And so the opposite happens. And we can see the dollar's got a perfect score, and yen has got a perfect score, and that's it. So I could make it a long video, but I don't really want to. But maybe I could do a second parter to go explain it a little bit more. But there are, there's two ways of doing it. We can check on the spreadsheet. Above 50%, the trap's in. A very much a longer term view for a longer term trading idea, not intraday, but looking at the cross on the SSI. So this was a month ago, nearly. In 2 days' time, it would be a month ago, and you would have gone, you would have shorted it at the point where they went long and they crossed the 21 moving average there, right? So let's see. So you would have shorted it at 1840, and look at where price is now. Okay, so that's the trap. On the longer term view, this is an intraday method because I don't really like holding trades for a particularly long time. I like to get in and out, I don't really like to hold trades overnight because I don't know what's going to happen news-wise. So this is my preference, but if you're a longer term trader, this is much better. And that's how it is. So the static level, it was a sell because they're long, and dynamically they added to that positions, and of course when they do, price is going to fall, and that's it.